Hey, how's it going, everyone? It's Nick here from TraderLine. I've had a few people ask recently for kind of an explanation on buying correctly and getting optimal entries. So this video is going to be very short. It's very self-explanatory, but it helps to kind of put some numbers together and look at a few examples. So for the two examples I chose today is 5 and Amazon. So first up we have 5. Now 5, we're looking at a breakout through 104. At the time I took this screenshot, it was trading at 106.82. Pre-market, however, it's trading above 107 now. So we're going to use that number in the calculation. All of your work should be done the night before. All of the work when it comes to trading is done in your research. That way you set your alerts, and when your alerts trigger, the volume's there, everything's there. You go ahead and hit buy, and there's no more thinking about it. All of the thinking is done when you're doing your research. That way, when you're placing your trades, it's all mechanical. There's no thought involved. There's no emotions involved. So looking for a breakout through 104, we're looking for good volume. It broke out through 104, it broke out on good volume, and so we initiated our trade. If we have stops at 99 here, which puts us right below the $100 mark, and the 10 and 21 DMA, which has been acting as support, if we were to get stopped out, it would be a 4.8% loss. We have a firm rule that you don't buy anything if it runs over 2% past its pivot point. So when a stock breaks out, if it's within 2% of that breakout, you can go ahead and buy it. If not, leave it alone. There's more trades out there. And you could either wait, be patient, and if it comes back, start a position, or just wait for it to set up again. We're always focusing on risk, not how much we can make. And that's why we're consistently profitable. So if you're focusing on risk, like I said before, 4.8% loss if it hits 99. Now, if you were to chase this up at 107 and start a position, you have FOMO, you don't want to miss out. And then it hits those stops at 99, now you're losing about 7.8%. So you're going to lose an extra 3% on your trade, and that will do a lot of damage to your account. And the only reason was because you chased it, and you let that FOMO kick in. This is why it's very important to be a mechanical trader, and you cannot let your emotions get involved. If you're looking at this with no emotions, and you're not in it, you can clearly see that you missed the breakout, and so you're going to wait for it to come back in and retest, or you're going to move on to the next one. But if your emotions are involved, you'll be looking at this and say, all right, it broke out on good volume. I didn't get in. I really want to get in. I'm going to buy it here. And that's going to put you in a much worse situation, and your risk to reward is going to be nowhere as good. So you're setting yourself up now for almost an 8% loss. The next example and the last example I'm going to use for this is Amazon. So Amazon broke out the other day through 1760, and it's been trending pretty well since. So when I took this screenshot, it was trading at 1827.50. Now you have your stops here on Amazon. If you bought the breakout, you have your stops now 1690 right by the 50-day moving average on a closing basis. Now if that stops hit and you bought it at the breakout at the optimal entry point, you're losing 4%. Now if you're looking at this with emotions, you didn't get in, you might be saying, oh, it's going to keep going up, it's Amazon. Regardless if it's the strongest stock in the market, you need to worry about your optimal entry. Your entry points are going to be your protection. Especially now with summer trading when things are getting choppier, breakouts are failing a lot more often, you really want to make sure that you have that optimal entry. So if you were to chase it up here and you got stopped out, that's now an 8% loss. So you just doubled your loss. So it's very, very important to not chase. Now when you see volume coming in like this, you see Amazon making new all-time highs, yeah, it's very tempting to just jump in and buy some, but you have to stick to the plan. If you missed it, just wait for it to come back in and retest and start a position, or even if it's a couple months, wait for it to present another entry area. If the next entry area is at 1900, would I be mad at myself because I didn't start it here at 1827? No, I would never, because right here at 1827 is not the optimal entry point. So although I technically could have bought it cheaper, that's hindsight. And hindsight doesn't do you any good in real time. So you only want to buy when the odds are in your favor, and by doing that, you keep the odds in your favor by sticking to the plan and buying only within 2% of that breakout. If it goes past, you just say goodbye. Just be patient. So I'll use an example over here. After Amazon gapped up from earnings, it was kind of trending higher. Now, this was not a time to get in because you see that we're slowly trending higher and the volume is tapering off. And so this is a failure prone pattern, and it has to retest its pivot. It came back down, retested, and then it slowly started to shape up. Now if you were to get into Amazon after it retested and it took out these highs around 1600, after Amazon had a big run and it pulled back in, your position, you got the right entry. Your right entry was at 1600. It does not come back in and touch 1600. So you're going to still be sitting profitably. Now, if you chase this and you bought it up here around 1700 because you see Amazon making new highs, now when it comes back in and it makes this low here through the 21 day, you're sitting on a loss when you wouldn't normally be sitting on a loss if you bought it correctly. So now you're sitting on a loss, and when you're sitting in a loss, you have to make much more critical decisions than you do when you're sitting with a cushion. So the takeaway from this, don't buy anything if it moves over 2% past its buy point. If it's within 2%, it is still buyable. And one of the greatest protections is getting that optimal entry, because your risk is defined. You're in at the right point, and you're not chasing. Chasing is a result of emotions, and all of our members know that we do not trade with emotions. It's all mechanical, and that's the only way you're going to be profitable. If you guys are watching this and you're having trouble dealing with your emotions and you're getting too emotionally involved in your trading, a great book that I recommend is Trading in the Zone. Trading in the Zone, if you look it up on YouTube, the entire audiobook is there for free. That book is in my top 2 favorite books, and everyone that we've recommended it to so far, it has truly helped their trading immensely. So that's it for this video. Very easy topic, very quick. If anybody has any questions, please don't hesitate to reach out. If not, I will talk to everybody very soon.